In this video, I'm continuing my shift from SCHD to Rowe Price, TROW, a dividend aristocrat with a strong yield and a bit more volatility than an ETF, which opens up more opportunities to generate income through options. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals. I started this position at the end of January with 150 shares and sold both a covered call and a cash secured put. Those February contracts brought in solid premium, and when the put finished in the money, I picked up another 100 shares just in time to capture the March dividend. Now it's March 21st, and with the price pulling back, I've decided to make a few more moves live during this video. I'll walk you through what's already happened, what my spreadsheet looks like, and what I'm considering next. By the end of the video, I'll own 360 shares of Rowe Price, but how I get there and what I do next might surprise you. Let's take a look at the full trade log and talk through it together. In this account, I have 250 shares of Rowe Price. I opened this position at the end of January by buying 150 shares and paying $117.88 for them. Then I sold a cash secured put and rolled it out, bringing in about another $300, and then was assigned early on February 21st to buy 100 shares, paying $115 a share for them. The share price today is significantly lower than the amount I've paid for the shares. There was an ex-dividend date last Friday, so I have an upcoming dividend payment of $1.27 per share. I calculated the dividend payment, and I'm going to be receiving $317.50 on March 28th. Even though the share price has declined significantly, the dividend payment will help reduce my average cost per share. But I need to decide what I'm going to do today. When I was assigned in February, I made the decision to wait until after the ex-dividend date to see where things stood with this position and decide how to handle it. The first thing I'm going to check is to see if there is any meaningful premium to be had by wheeling this position, by selling covered calls at the $115 strike. If I wanted to wheel this position, I could sell a covered call with a strike price of $115. But looking at the April 17th expiration date and looking at the May 16th expiration date, there is almost no meaningful premium to be had at that strike price. So I next considered undoing the assignment, selling the shares and reestablishing a cash secured put with a strike of 115 or below. But neither the April 17th nor the May 16th expiration dates would bring in enough premium to make that setup worthwhile either. I feel pretty good overall about this Dividend Aristocrat, and projections this year are that financial stocks are going to recover and be moneymakers. So I'm taking a different approach. I've decided I'm going to buy 100 shares of Rowe Price today and use it to bring down my adjusted cost basis. I'm going to think about the 100 shares that I buy today a little bit separately from the rest of the accounting. If I pay $9,257 for 100 shares and sell a covered call with a strike price of $95, I can bring in about $150 in options income, and if the shares are called away from me, I'll receive another $250 in capital gains. Right now, my average investment per share is $115.53, but after this trade and after the dividend payment comes into my account, I will lower my adjusted cost basis and improve this position. And actually, while I'm at it, instead of just buying 100 shares, I'll add 110 because this is a great price for Rowe Price, and it has a dividend yield of 5.5%. So it seems like a good time to add a little extra to the position. It filled at 92.58. Now I will sell a covered call with a strike price of 95. That filled at a price of $155 per share. Now I'm going to sum the expense and income in this position to date. Right now I am out of pocket in this position $38,595.28. I have 360 shares for an average investment per share of $107.21. The net liquidating value of the position right now is $33,204. I have an unrealized loss of about $5,400, but I'm going to be able to take care of that by receiving dividend payments and selling more options. And I'm going to hang on to some shares just because I think this is a solid company that's going through a pullback, so it's a pretty good buying time. It'll just take a little bit of time to bring this back into profitability, but I have a plan to do it.